Hello, welcome to the European Open briefing for Wednesday, May the 9th. I'm Rafi Barjan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. Oil prices have jumped higher after President Trump pulled the US out of the Iran nuclear deal, as was pretty much expected. The US dollar is extending its gains on the back of expectations that the higher oil prices will lead to higher inflation. That is driving treasury yields higher, making the US dollar more attractive, and all of this is of course weighing on other majors. We've got the euro and the pound hitting fresh lows, as well as common linked currencies. The Aussie, the Kiwi, and the Loonie are also all resuming their slide downwards. So let's have a look at oil prices now. We can see both WTI and Brent crude climbing higher. WTI hasn't made fresh highs yet. So it has managed to climb to Monday's top of 70.84. Brent crude has now reached a fresh 3.5-year high of 76.87 dollars a barrel. So President Trump, as expected, has withdrawn the US from the Iran nuclear pact, and he has also said that sanctions on Iran will be reimposed within 90 and 180-day time frames. This will include a ban on Iranian exports, so that is likely to disrupt oil supply. So that's what's causing the surge in oil prices at the moment. There is some hope that as the UK, Germany, and France are working together to keep the deal going even without the US, so that could potentially keep a lid on tensions in the Middle East, though overall market sentiment is being affected by the latest developments. Saudi Arabia has indicated that it may raise its output to offset any future cuts in Iranian exports. And we are seeing energy and defense stocks rise after the latest decision by President Trump, though due to the risk of the broader equities market is lower this morning, as it could impact European and Asian companies doing trade with Iran, which will now have to abandon their contracts with Iranian companies. Let's move on to the US dollar now. We can see the dollar index continuing to climb upwards. It's hit a fresh 4.5 months high of 93.39 dollar yen. Is also up. It's approaching once again the 110 level. It briefly rose above that last week. The Japanese yen did rise briefly after the decision yesterday by Trump, though it has actually pulled back this morning. The yen, despite the risk-off sentiment, the yen is being pressured by rising US Treasury yields. We're seeing 10-year Treasury yields, the US Treasury yields climbing back above 3%. So the surge in oil prices is raising expectations that the Fed will have to raise interest rates faster than currently or previously being projected. Inflation will in fact be in focus this week. We've got producer prices coming out of the US later today, as well as the consumer price index tomorrow. If those fall below expectations, we could perhaps see some moderation in the US dollar rally, but for now the dollar is looking extremely bullish. Let's now turn to European currencies, because we can see both the euro and the pound heading downwards. The euro has fallen to 4.5 months lows of $1.1821, and apart from the bullish dollar, also weighing on the euro is political uncertainty in Italy, as the political parties there struggle to form some sort of a coalition following the inconclusive elections we saw early in March. So a snap election as early as July is looking more and more likely, and if we do see fresh elections, that could potentially give more powers to populist parties, and that would be seen as a negative positive development in the Eurozone's third largest economy. The pound, although it did touch a fresh 4-month low yesterday of 1.3482, it is, we can see here in the chart, it's still being broadly supported just below the 1.35 level. We've got the Bank of England policy meeting tomorrow, so investors may be cautious about driving the sterling lower ahead of that all-important announcement, where the bank will likely hold rates but will probably signal a rate hike later in the year. Let's now look at the Australian, New Zealand and the Canadian dollars. All of them are looking very bearish at the moment. The Aussie and the Kiwi, of course, are being pressured by the rising yield differentials. With the US, the Aussie has slumped to an 11-month low of 0.7410. The Kiwi has dropped to near 5-month low of 0.6947. We've got the Reserve Bank of New Zealand meeting coming up later today. They will announce their decision at 21 hours GMT. Although the RBNZ is expected to hold rates, the meeting will be gaining some attraction as it will be the first policy meeting by the new Governor Adrian Orr, where we may see some change in the central bank's language. The loonie hasn't really benefited much from higher oil prices. It in fact fell to fresh 7-week lows yesterday. We saw dollar loonie climbing to 1.2997, just short of the 1.30 level. It might gain some support though later in the week from Canadian jobs data on Friday. And finally, looking at today's economic calendar, it's going to be fairly quiet apart from US producer prices. We've got the RBNZ decision at 21 hours GMT and the summary of opinions by the Bank of Japan at 23:50 GMT. That's it from me. Thank you very much for watching and have a great day.